What is up? Good morning, everyone. Hope you're all doing well. It is Tuesday, March 11th, and we are riddled with volatility on the overnight. We had a pretty significant move that undercut the prior session lows actually before seeking this rally. And is volatility, the question here, we got a pretty big news update. Is volatility going to be even more aggressive and harder to digest, right? So, around the clock trading, markets have been dealt a blow by growth and recession fears recently, right? The unpredictability of trade policy, risks to sector wide investment and spending, whether it's a good buying opportunity or another bear market, right, is up for debate. Everything is up for debate realistically. A lot of recession fears, a lot of dip buyers, right? Everyone's on either side, but it is not necessarily the easiest one to pick out. But for traders, right, the environment they find themselves is set to speed up even faster. So the Nasdaq has applied for regulatory permission to offer 24-hour trading of equities following the likes of the CBOE Global Markets and the New York Stock Exchange, the ICE. Brokers like Robinhood and Interactive Brokers already offer trading beyond traditional market hours on alternative trading systems like Blue Ocean, for instance. But the next evolution is set to bring the feature mainstream. So note that there is still some time before kickoff, with the Nasdaq targeting the second half of 2026. So a lot of time until then. It's not going to happen tomorrow or overnight or next week. While the promises of round the clock trading can further democratize markets, it also demands careful and deliberate planning. This is what the Nasdaq president said on LinkedIn, actually. And liquidity, transparency, and integrity remain the lifeblood of vibrant markets, and any structural change must uphold these principles. So, realistically, you're going to get more liquidity, right? If you trade around the clock, it's going to open the doors up to the world, right? Different time zones. Speaking of different time zones, we're still in this weird hour change, but it is what it is. It's going to open up to different time zones now. That doesn't mean that the overnight trading session is going to become as robust as the regular trading hour session. Take futures, for instance. Futures trade on the overnight. They trade during the day as well. And realistically, they do have good movements overnight, but it wasn't always like that. That wasn't always the case. So there is a huge potential for more volume and more liquidity and decent movements that happen on the overnight that would open the doors to more, international traders. So Nasdaq attributed its decision to the rise of retail participation as well as the growth of U.S. stocks across international markets. It's a big deal as total foreign holdings of U.S. equities reached $17 trillion as of June 2024, 97% increase since 2019. 97%, that's insane. So settlement dates have also sped up in recent years, with the industry moving to T+1 in 2024, and the next progression is likely to center around some instant or same-day settlement. But those coming discussions will have to ensure sufficient protection of market participants. So we are seeing a lot of changes. One of the big changes right now that we have to note is the most recent very large downside that we've been exhibiting in this market. And it doesn't seem like things are changing too much for big tech as it's swinging on its way down. It seems like finally Apple has fallen off the cliff as it remained very sturdy in comparison to a lot of big tech. And it's a big shakeout, right? The unwind is still prevalent here, and until we have large turning points, meaning larger accumulations and moves through multiple distributions higher, it's a very hard thing to do to pinpoint a bottom. Yesterday we did pretty good to find a decent little low on the S&P 500 at that 55.75 area. We held a nice, very strong move nearly to 56.40, but reality of the situation is that we're in a position right now where as we accept into balances lower continuously, the market is still bearish. So you're looking at it from the perspective of selling rallies into these distribution tops and into these key distribution ledges. So the way that I see it right now is that if we can't accept above higher distributions, which would suggest 57.80, right, it's a pretty decent move. It's over 100 points in terms of the current standing of the market. Then I'm not in a position to look at this and say, oh, like this is a low, this is a low, this is a low. You're much better off looking at this market and looking at it from the perspective of, okay, we've accepted a distribution lower, right? So we've accepted under 5,700 on the S&P from yesterday. Sell rallies into 5,700 with the expectation of seeing 5,640. You move under 5,640, right? The best probability realistically is to sell rallies into 5,640 to 45, right? As long as we're below these distribution areas, I'd rather position myself to sell rallies until we get momentum shifts that allow prices to move into auctions higher for cleaner acceptance. So even though I do have more of a bullish nature, I would say, especially from the longer term or the swing perspective, I don't want to fight this on the intraday. On the intraday, what happens is markets open and it's continuous selling off the rip, right? Just continuous hammering to the downside, massive orders on the sell side, and fighting those is going to leave a hole where you don't want a hole, right? It's going to leave you very, very bloody and distraught. So the way that I see it is, let this thing shape up, right? Continue selling rallies until S&P realistically makes a very valiant cross above 5,700 and an aggressive one at that. And then we can start talking about those kinds of turning points, right? Otherwise, rallies are shortable. So we'll go from there. We'll chat soon. Hope everyone has a fantastic trading day. Be careful.